The stock market and crypto markets are relatively flat in a consolidation phase, waiting for the next CPI print and the Fed response to it. So let's take a look at what's going on in the markets and with Bitcoin and crypto. And right now, pretty much flat across the board. The NASDAQ's down about 0.38, S&P down 0.05 flat, and the Dow Jones is up about 0.04 right now. It's been kind of up and down today, a 0.5% up, 0.5% down. So we'll see, as always, what the momentum into the close looks like. That gives you an idea of what investors are thinking in terms of price action into the close. And there are a number of stocks that are down today. We'll talk about a couple of them here in a minute. Coinbase is taking a hit because of a downgrade due to losing fees, laying people off because of the crypto winter that we're in right now. Wall Street is facing layoffs because of the 2-year hiring boom, which is now tapering with all the SPAC deals and LBOs and just IPOs and all the things that aren't happening right now because of market conditions. So all of the new hires on Wall Street are going to have to find somewhere else to go. We saw kind of the same thing happen after the 2008 and 9 situation. A lot of the banks laid off, a lot of the investment firms laid off. And a lot of companies are laying off right now. Pending home sales came in a little bit hotter for May and surprised a number of people. Of course, it wasn't much. It was just a little bit. It was up 0.7% compared with April, but still down year over year. And pending sales were 13% lower than they were in May. So the housing market is continuing to correct. Stock market is continuing to correct. And really what everybody is watching and waiting for right now is the next inflation print and the Fed's response to that. So we're seeing markets kind of hanging there a little bit flat, just kind of, consolidating and waiting for the Fed to come out and speak this week. Powell's going to talk. A couple of the Fed board members are going to talk this week. We've got some CPI data coming out that the Fed watches. So we'll have to wait and see what that looks like. And then the Fed's response to it, leading into the next CPI print coming out in July, and which arguably should be higher than what we saw come out in June. And then the Fed right now, obviously their messaging is they're serious about fighting inflation, trying to regain some form of credibility. So they're going to continue to raise interest rates until they get inflation under control. Right now, the effective rate's about 1.5, 1.75. They want to be at 3.5%. So they're only about less than halfway there. They have a lot of work to do. Inflation is red hot. It's going to get hotter, as we know, through the summer, not just the temperature, but inflation, costs always go up in the summer for food, travel, things like that. So the Fed has its work cut out for us. They say they're serious about it. So we will see what the follow through looks like. And again, these are just levels that Bitcoin's been going through. Let's take a look at it on the daily here. This bull flag here, and then these levels waiting for Fed decisions and things like that. Of course, we have the 4th of July weekend coming up. So the big question is going to be, what does Bitcoin look like and what does the price action look like into the holiday weekend? And let's take a look real quick at what the markets look like. Here's the Dow Jones coming off that nice little week last week, had a nice little bounce and going negative again like it's been doing, right? We have drop, bounce, and this is what bear markets look like. It takes time. Historically, bear markets in traditional markets have lasted a couple, 2-3 years. Sometimes it can take a year or two to get to the bottom and kind of work its way out, especially with the last couple of Fed-induced bear markets, which was the one leading up to the 2009 financial crisis. That was a Fed-induced recession that led into that situation. And, it took a little time to unwind. We'll take a look at the S&P here. And just, to bring this into perspective, market peaked right back here on, January. So far, if you look at where we're at from a time frame, this is on the daily. It's only 119 days into this correction right now. And if we look at even 2018, last time the Fed raised rates, that was a number of, they started right back in here. That took about almost a year to kind of play out to get to the bottom before the Fed pivoted. And I know a lot of people are expecting the Fed to pivot here, but really not until inflation is back in check. They will not be able to pivot. But here's the 2008-2009 financial crisis. Market peaked in October of 2007, reached a bottom in March of 2009. So that was 359 days, basically a year, right at about a year it took just to get to the bottom. And then it took a couple of years for it to recover. So this is what, bear markets look like, right? This obviously was a banking crisis. This time it's a recession, inflation, recession situation that we're dealing with. So we'll just have to wait and see how this all plays out. So let's go back to Bitcoin, because Bitcoin is doing some things it's never done before. And, yes, this time is different in Bitcoin's history. This is a very different market. Bitcoin is only 10 years old. So a lot of these things, rules of thumb, I mean, it's 10 years old, 11 years old. So it doesn't really have a tremendous amount of history. But obviously the big news is the 200-week moving average, that in Bitcoin's history, it's always held that as support. Now it's closing below it. And, it's not even resistance at this point. It's just well below it. The 200-week moving average right now is coming in at 22,439. So we'll have to see if that continues to hold up and, where it goes from here. But that's something that never happened before. But again, Bitcoin has only existed in a zero interest rate, Fed-driven, multi-trillion-dollar liquidity market. So this is very different. This is a different environment for crypto, different environment for Bitcoin, and it's a different environment for a lot of people that have never been through a recession before, never been through a market where the Fed is not propping it up. You can see this moving average, the 50-week and the 100-week moving average getting ready to cross. We can look at what's happened in the past when that happens. But the thing is, with all of these indicators, they are all lagging. And the problem is, this is a very different environment this time than it was last time. So looking back at the way Bitcoin, the bear markets of the past, the way it bottomed, all of these different things, moving averages, breaking previous all-time highs. I mean, even the depth of the correction of previous bear markets, 85% for Bitcoin, 95% for crypto, altcoins and things like that. This time is different. This is a different market. We have inflation. We have the Fed that's raising rates. They're going to start unwinding the balance sheet. You've got recession looming. This is a very different environment. So the question is, can you count on an 85% drawdown just because that's what it did last time? Bitcoin's never gone below a previous all-time high after setting a new all-time high in its history in the 4-year cycle. Again, this was an all-time high, set a new all-time high, broke below it, but it wasn't a 4-year cycle high. The rule was every 4 years, new all-time high, then Bitcoin never goes back below that previous all-time high after setting a new one in the 4-year cycle. The halving narrative. So what's pumped crypto a lot in the past is the halving, right? You got to get in before the supply gets cut in half again, and that kind of thing because of the limited supply. And, that was a retail driven narrative, which kind of pumps the market. People start selling, everybody gets out. The problem this time is the other thing that this time is different, especially than this last area here, was you had stimulus checks coming into the market, at scale. You had a lot of people that weren't paying rent, that weren't paying their mortgages, that were receiving stimulus, all those types of things that they were able to invest in the stock markets and in crypto. I don't know what that number is. It's not, obviously a huge amount, not trillions of dollars, but it was probably, billions to tens of billions, potentially even hundreds of billions that came into the market that otherwise wouldn't have been there. And of course, everybody making money in this bull run. And then when these sell-offs happen, it runs people off the market, runs them out of the market. It takes a long time to get people to come back to the market after they've been burned like that. And people have to wait till it gets down to, really low levels before they feel comfortable buying back in and saying, well, shoot, if Bitcoin's around $3,000, I got nothing to lose buying here. Whereas, if you're buying in this area at 20,000, and I'm not saying you should or shouldn't, but people are looking at this, investors are looking at this, institutions are looking at this and saying, well, wait a minute, we know that it went down here in the pandemic. We've got a recession coming. We've got a financial situation coming. There's a lot of contagion in the space. There's a lot of, DeFi protocols that are still, dealing with deleveraging and potentially going bankrupt and liquidations and stuff that could still really affect things. And the biggest one is we have the Fed that's going to raise rates again. So what can we expect? The same thing we've seen each time. And it's been pretty automatic. Every time the Fed raises rates, we drop, Bitcoin drops about, well, that one was 22%. Let's see what this one is. Let's just go to the level about 28%. And then this is the most recent drop from high to level, about 38%. So, anywhere from 20 to 30%. So if that happens again, this is what investors are looking at. And it certainly doesn't make sense to buy ahead of the Fed, right? because you know what the market's going to do. 30% is down around 15,000, and there's a lot of technical confluence that lines up for that $15,000 price target, including just the breakdown from this level here to where we're at now. So what you have to expect is what we've seen each time. Inflation will come out hot, the Fed will telegraph the move, and markets will sell off in anticipation of that. The other thing that some people have asked is the question of, well, this is the most telegraphed recession, the most anticipated recession. Everybody knows a recession is potentially coming. The politicians are denying it. The Fed's been denying it until last week. Chair Powell finally said it's possible. Of course, he said inflation was transitory. So the political narrative is to not spook people. Don't talk about recession. We don't want to scare people. So the politicians don't want to put that word on the table. They want to deny it as long as possible to kind of, get it out of people's minds. So they're not thinking about it and talking about recession and things like that, because everybody's already worried about inflation, and that's top of mind right now. And that is affecting growth. What is recession? Recession is negative GDP for 2 consecutive quarters. We've already had one. So if this next quarter comes out where we had negative growth, then, we very well may already be in a recession from a technical definition. And, what is GDP? So if you have to think about what GDP is when they're talking about recession. GDP is basically top line sales of the economy in all sectors, all of the money the government spends, all of the money that's, spent by consumers. It's what the countries produce as a gross national product. So gross domestic product, GDP, is our top line sales. And with inflation, top line sales should have gone up, but also people are pulling back on their spending. So that's going to affect top line sales. So recession in and of itself isn't a big deal. If you have negative GDP, whatever, people are pulling back, it's not that huge. Deep recession, 5, 10%, things like that consecutively, where you start seeing layoffs, things like that, that's a different story. And that's the kind of recession that, the politicians are talking about, that we're not going to see, that's not imminent or possible or whatever. And it's kind of what the Fed is trying to avoid with the deleveraging of the economy, the reset in asset prices, and getting to a point to where in the next election cycle, they can pivot, pump liquidity back in the market, pump the markets up, get everybody feeling, good again. So when Biden stands up there, or whoever's going to run for the Democrats, against the Republicans, they can stand up there and say, as incumbents, are you better off this year than you were, this election than you were last election, or this year than you were last year? If that question is asked right now, people are not going to respond positively, from a financial standpoint, and the markets and things like that. But, if the Fed's able to pivot and pump the markets back up and change course, then, that narrative will be different. And the lower the markets go, the higher they can bounce. So, that's what's going on there. Let's take a look at, a little bit of the crypto news here. Again, Goldman Sachs cuts Coinbase to sell due to falling crypto prices and industry activity. Of course, they're laying off. So, the crypto exchanges and stuff are under pressure. Crypto hedge funds and traders are shorting Tether. Paolo Adrino put out a little thread about, Tether and why they're always under attack. At the end of the day, they are not producing a credible audit. They're only producing attestations, which mean nothing. You can pay anybody to say anything. So get a top 10 accounting firm, one of the big 10, top 10, to do a complete, transparent, full audit of everything, including bank accounts, history, assets, all that. And you put all this, FUD, speculation, whatever you want to call it, false accusations, if that's what they're saying it is, you can put all that to bed. They won't do it. They're refusing to do it. They're saying that we're not going to do it. They keep saying, oh, we're going to have an audit. We're going to have an audit. We're preparing. Well, what are they preparing? They're cleaning up their books. They're getting rid of stuff and, trying to, make things look as legitimate as possible if they ever potentially do, or they're just trying to stay alive as long as possible before the bag, the cat's let out of the bag. So I'm not saying one way or the other. I'm just saying, if you're refusing to provide full disclosure, there's a reason. So nobody refuses to provide full disclosure unless they can't, because it will expose them. So that's just all I'm going to say about that. DeFi is evolving, and that's where the contagion in the space is now. If you have a protocol that says we're going to pay you by printing new tokens, but you have to lock up for a certain period, you have to understand if the market conditions change and those tokens, lose their value. And at some point, the only way you can get your money back is, when the unlock comes, you have to sell your tokens. There's no market for it. Then, everything collapses and, There's no new liquidity coming in to keep everything pumped up. So a lot of contagion there. And the other one here is, obviously Morgan Creek trying to counter FTX's BlockFi bailout. When people see these stories, about, FTX coming in and bailing people out, that's not as simple as it sounds. Those aren't transactions that happen overnight. There's a lot of contagion out there. There's a lot of collateral damage out there. There's a lot of, multiple layers of leverage that need to get unwound. So people are going to come out of the woodwork when these things start to happen because they all get wiped out, right? And that's the thing, is Morgan Creek would get wiped out in that deal. And then Celsius, and you have the other story where Goldman Sachs is trying to put together investors to buy Celsius assets. And, a lot of people think this is bullish and this is going to, be a good thing for the market. This is not going to be a good thing for the market. They're going to buy these assets at pennies on the dollars. If Celsius files bankruptcy, think Mt. Gox, it could take years and years before any of this ever happens. But if Goldman Sachs or investors come in to buy these assets, they're going to buy them for pennies on the dollar and they're going to dump them as soon as they can to make profit. So this is not Goldman Sachs coming in to buy and hodl and prop the market up. This is these guys coming in to make a quick arbitrage play, buy and sell as fast as they can. So, that's kind of what's going on there. So you have to read between the lines on these stories that, a lot of people are putting out there to kind of, present these bullish narratives to get people to buy in at levels that they think, they want people to buy in to keep the price propped up, right? So at the end of the day, the truth of the space at the end of the day is it takes new capital, new investors to, prop the price up, to, get the price to go up. So, whales and, longer term holders that have a lower basis can distribute and sell to the new investors coming in. That's how stock works, a lot of times. Obviously there's companies that have real growth, real earnings potential and things like that. But at the end of the day, stocks are risk assets, they're speculative assets. Crypto are risk assets, speculative assets. And, Gary Gensler has come out and said that Bitcoin, in his opinion, is a commodity. Everything else pretty much are securities. So it'll be interesting to see, how all that plays out. But, at the end of the day, you have to understand, the whole narrative of, pumping the price up. You got to bring new capital in the space, new investors into the space to get the price to go up. And, people telling you this is the best buying opportunity ever, never sell, things like that. Everybody has to make their own decisions and decide what their own strategies are and what levels they want to buy at. And, when you hear people say, oh, all the whales are buying, all the billionaires are buying and all that, well, billionaires are investing a very small percentage of their portfolio. They could walk away from it and never feel it. The whales that are buying, their basis is so low, they can buy at 60,000 and their average is still extremely low. So you have to qualify these things that you're hearing, make decisions based on your own ability to, if this goes down to whatever level, that you're fine until it comes back to a minimum at that level or beyond. So you want to make sure that when you're thinking about buying or selling, that you're taking your own circumstances and situation into account and, what you can handle in terms of a downside potential. And you have to expect, if you're going to buy right here, you have to expect the price to go down, and it could go down to this, pandemic low of 3,000, 3,800 or even lower. We don't know. It all depends on what the, economy does, what the Fed does, and, how deep a potential recession could get, or it could turn around and, double over the next few weeks. We've seen that before too. So these are the things I'm looking at, and I'll see you on the next video.